Okay, let's unpack this. Welcome to the deep dive. Today, we are plunging into Lumentum's latest numbers.
Yeah, specifically their Q4 and full fiscal year 2025 results, which just ended June 28th.
And our mission, well, it's to cut through those numbers.
Exactly.
That's
We want to figure out what the earnings and maybe more importantly their forward guidance really tell us about how Lumentum's doing, especially with all the buzz around AI.
We'll find the key takeaways for you.
Get you informed fast.
So, the big picture for Q4. Lumentum pulled in $480.7 million in net revenue.
Which actually beat the high end of their own revised guidance. Pretty strong signal there.
But here's what really jumped out at me, the profit side. GAAP net income hit $213.3 million. That's 2.96 cents per share.
Wow. Yeah, considering where they were.
Exactly. Remember, Q3 of this year was a GAAP loss of $44.1 million, and Q4 last year, a massive GAAP loss of $252.5 million.
So not just a turnaround, it's quite dramatic.
It really is. And yes, for everyone listening, we mentioned GAAP. We'll also talk non-GAAP figures, and we will circle back later to explain why companies use both and what that tells you.
Yeah, that's important context.
Right.
Because the non-GAAP side also shows, significant improvement.
Okay, what did those look like?
Well, non-GAAP net income for Q4 was $63.3 million, or 0.88 cents per share.
Still a big jump from Q3's $40.9 million.
Absolutely. And a world away from the $8.9 million non-GAAP loss in Q4 last year. Their non-GAAP operating margin landed at 15.0%.
Healthy.
Pretty healthy. And like you said, we'll get into the GAAP versus non-GAAP weeds later, but these adjusted numbers, they try to give a cleaner look at the core operations.
Right, stripping out maybe some one-off things.
Exactly. And the CEO, Michael Hurlston, he pointed straight at AI, saying they executed exceptionally well in meeting robust demand across our portfolio of cloud products supporting AI data centers.
He used the term broad-based too, right, for that outperformance in cloud.
He did, which suggests it wasn't just one lucky product hit.
So that makes me wonder. Broad-based is good, but what specifically was flying off the shelves? What's powering this cloud surge?
Okay, yeah, good question. It's a few key things really firing on all cylinders. We're talking EML chips.
Electro-absorption modulated lasers, right? High-speed stuff.
Precisely. Crucial for shifting data fast inside these massive AI data centers. Then you've got pump lasers, narrow line with laser assemblies, important for connecting data centers, and significantly, 800G modules.
800G, that's the really high-speed interconnect now.
That's the leading edge. It shows they're playing at the forefront of building out the infrastructure needed for these huge AI models. These components are foundational.
Makes sense. And how's their cash situation looking after all this?
Pretty solid. They ended Q4 with $877.1 million in cash. That's up about $10.4 million from the previous quarter. Shows they're generating cash from operations.
Okay, so strong quarter overall. Let's break it down by their main business areas. They have two, right? Cloud and networking and industrial tech.
Correct. And there's absolutely no question which one stole the show in Q4.
Let me guess. Cloud and networking.
You got it. Revenue there hit $424.1 million.
Wow, okay. That's what percentage of the total?
That's 88.2% of their total revenue for the quarter. Huge slice.
And the growth rate.
Phenomenal, up 16.1% just from Q3 and up a massive 66.5% compared to the same quarter last year.
66% year over year. That's hyperscale demand in action.
Exactly. They specifically said it was led by hyperscale cloud strength. We're talking about the giant data center operators.
The Googles, Amazons, Microsofts of the world.
Those are the ones.
Yeah.
And Lumentum mentioned they actually beat their own target for cloud module growth, over 50% quarter-over-quarter growth, and shipped to all three of their big announced hyperscale customers in Q4.
So they're delivering.
They are. And that EML business we talked about, they said it roughly doubled compared to Q4 last year, way ahead of their plan.
Doubled. Okay.
They kept shipping ultra-high power lasers for something called CPO co-packaged optics.
Ah, yes. Putting the optics closer to the chips for efficiency.
It's exactly right. Lower power, less delay. Super important as AI computing scales up. And they even got their first revenue from optical circuit, which is another next-gen tech for data centers.
Sounds like innovation is paying off there.
It does. And, it's the sixth quarter in a row they've seen growth in those narrow line width lasers for data center links. Plus, strong demand for pump lasers in undersea cables, again, driven by cloud investment.
So cloud and networking is just booming. It really feels like that's the core of Lumentum now.
It certainly looks that way from the Q4 numbers. It's driving the ship.
But what about the other piece, industrial tech? Did it get any lift?
Industrial tech is, well, it's a different story. Still a decent contributor, but not the growth engine. Revenue was $56.6 million.
Okay, that's the remaining, what, about 12%?
Roughly, yeah, 11.8% of total revenue. It actually dipped a bit, 5.7% compared to Q3.
Any reason given?
They mentioned a seasonal pattern mainly affecting 3D sensing, but interestingly, it was still up 5.6% compared to last year's Q4.
Okay, so not falling off a cliff, just not exploding like cloud.
Right. They did note steady demand for their ultra-fast lasers, especially for making solar cells, which is interesting. And they launched a new laser, too, the Pico Blade Core, for micromachining. So there's activity, just quieter.
Got it. So that incredible Q4 really sets the stage for looking at the whole fiscal year. Was this Q4 surge enough to turn the entire year around from that big loss in FY24?
It absolutely was. And you raise a good point. It wasn't just market wins. It feels like strategic shifts internally really paid off. They clearly focused their efforts.
So what was the final tally for fiscal 2025?
For the full year, net revenue came in at $1.65 billion.
Okay. And the bottom line, non-GAAP.
Full year non-GAAP net income was $146.4 million, or 2.06 cents per diluted share.
And compare that again to fiscal 24.
Fiscal 24 had that huge GAAP net loss of $546.5 million, and even on a non-GAAP basis, net income was only $29.8 million.
Wow. Okay, so going from roughly $30 million non-GAAP profit to over $146 million. That's a massive improvement year over year.
It truly is. It shows they weren't just reacting, they were actively steering the company towards these high-growth areas. Real strategic agility.
And I assume the full year segment performance mirrors what we saw in Q4. Cloud and networking way up, industrial tech maybe down a bit.
Precisely. For the full fiscal year 2025, cloud networking revenue jumped 30.0% year over year, hitting $1.41 billion.
30% growth for the biggest segment.
Yep. Meanwhile, industrial tech revenue for the full year actually decreased by 14.6% to $234.2 million.
Okay, so that really underscores the pivot. They are betting heavily and successfully, it seems, on cloud and AI infrastructure.
No doubt about it. That's what the growth story is.
Which brings us to the guidance. What are they telling us to expect for the next quarter, Q1 of fiscal 26? This is always where you see how confident they really feel.
Right, the crystal ball moment. And it looks pretty positive, actually.
What are the numbers?
They're forecasting Q1 FY26 net revenue between $510 million and $540 million. That's on a non-GAAP basis.
Okay, so the midpoint there, $525 million. That's up again from the $480 million they just reported for Q4.
Correct. Continued sequential growth, which is a strong sign. They're also projecting non-GAAP operating margin between 16.0% and 17.5%.
Margin's potentially ticking up too.
Seems like it. And non-GAAP earnings per share are guided between $1.95 and $1.10.
And what's the assumption behind that guidance? More cloud growth?
Yes. The guidance assumes cloud and networking will be up again quarter over quarter. Industrial tech, they expect to be roughly flat.
Makes sense based on the trends.
And the CEO's quote reinforces it. He expects continued strong demand for our AI products into 2026 or earlier. That suggests they see this AI build-out having legs.
It definitely sounds like they feel they're in a strong position in that market.
Yeah.
Okay, let's double back to something we promised, GAAP versus non-GAAP. Why do we keep seeing both sets of numbers?
Right. It's a fair question, and definitely something worth understanding if you follow company earnings. So GAAP generally accepted accounting principles.
Right.
That's the standard rule book. Everyone has to report based on those rules.
The official numbers.
The official numbers. But then companies often provide non-GAAP figures as well. These are adjusted figures.
Adjusted how? What do they take out?
Typically, they exclude things like stock-based compensation, which is a real expense, but doesn't involve cash going out the door or costs related to buying another company, acquisition costs, restructuring charges, things they see as maybe one-off or not part of the core ongoing business operations.
So the idea is to show a cleaner picture of just the day-to-day operational profitability.
That's the argument, yes.
Yeah.
To give investors a sense of the underlying performance trend without, say, a big acquisition cost muddying the waters in one quarter. Lumentum even mentioned they tweaked their non-GAAP method earlier this year for better consistency.
But it does raise that question, how much adjusting is okay? Are they just trying to make the numbers look better?
That's the debate, isn't it? Transparency versus providing what they see as a clearer operational view. It's why it's good to look at both GAAP and non-GAAP, understand the differences, and see the trend in both.
Good advice. And of course, any forward guidance, like the Q1 forecast we just discussed, comes with caveats, right?
Always. Companies have to state that these are projections, subject to risks and uncertainties. The market could change, demand could shift. But reading between the lines here, the overall tone from Lumentum feels pretty confident, especially about their AI-related business.
Okay, so let's try and wrap this up. Quick summary. Lumentum just delivered a really strong Q4 and turned their whole fiscal year around dramatically.
Yeah, a huge swing to profitability, clearly powered by massive demand for their components going into cloud data centers, especially for AI applications.
It really does feel like they're right in the sweet spot of that AI infrastructure build-out.
Definitely seems that way. And their guidance suggests they expect that momentum to keep rolling into the start of their new fiscal year.
It underlines that bigger trend, doesn't it? All this investment pouring into AI. It's creating huge opportunities for the companies making the essential hardware.
Exactly. It's like the old gold rush analogy. Sometimes the biggest winners are the folks selling the picks and shovels. Lumentum, with their lasers and optical modules, they're providing some critical shovels for the AI gold rush.
Often operating a bit behind the scenes, not always grabbing the headlines like the AI model companies.
Right. But they're capturing immense value from these foundational technological shifts. So maybe a final thought for you, our listener. Lumentum is one example in photonics. What other, maybe less obvious, enabling technologies or component suppliers out there do you think are positioned to ride these big waves, like AI, but might not be on everyone's radar yet?
Something to think about. That's our deep dive for today.